welcome back to the Ask Me Anything sessions at the Rapyd office in Tanjong Pagar. My name is Joel Yarbrough, and I'm very pleased to be here with Kevin Lam from UOB Tomorrow and Susan Hwee from UOB Technology and Operations. Format of this session is intended to be informal. It's an Ask Me Anything session, so we will try to be informal within the time horizon. If you do have any questions, please put them in the chat box and we will try to get to them. It's been a great pleasure to have such a wonderful set of speakers join us this week at Rapyd, and we're very thrilled to be part of Singapore Fintech Festival. So with no further ado, I would love it if each of you could just take a minute and introduce yourself and your current role.
Okay, I'll go first. Is it okay?
Yes, of course.
Yeah, my name is Kevin Lam. I've just come back to Singapore after been out in the region for 10 years. I'm Singaporean. Been with the UOB group since 2005. And when I first left Singapore 10 years ago, I went to Malaysia. I was heading the consumer bank there. And then after that, ended up being the deputy CEO of UOB Malaysia. And after about close to 6 years, I left Malaysia and went to Jakarta 4 years ago and was the country CEO of UOB Indonesia, where we have a sizable presence across 30 cities and about 4,000 employees there. We have a sizable business. And I think about 2 or 3 years ago, the group, UOB Group, thought of this idea of launching a digital bank in ASEAN, right? And Indonesia was picked as one of the countries. So I was a close collaborator, and lo and behold, I ended up now having to be responsible for it since October. So
be careful what you wish for is the lesson
right.
there. And Susan?
Has it been really 10 years?
10 years.
Wow, that's really fast. Okay.
You're glad to have him back then?
Yes, I'm very glad. I'm a fan of Kevin's. Hi, I'm Susan. I've been with UOB for about close to 20 years now, 24 years. I'll begin my 21st year next month.
Oh. So you started as a high school intern?
Sort of. And it has been a wonderful journey. With UOB, seeing UOB's expansion from being just a Singapore bank to the footprint that we have in Southeast Asia today. So through the various acquisitions of OUB, Bank Buana, as well as also Bank of Asia, and I've seen through, I think in the first 10 years, all the post-M&A integration work of creating a platform. And in then the subsequent 5 years of that was trying to standardize the entire technology footprint of the region. Then for which now some of these products that is being born, modernizing it, digitizing it, and Tomorrow is one that sits on top of this platform. And in Tomorrow, we didn't launch it in Singapore. We launched it in Thailand and Indonesia, the fast-growing young population, where we are targeting what we termed as the
YPF.
These days, everybody
all
goes
on
all the acronyms, but essentially the mobile first generation, not the mobile only. Probably our young children will be, but the mobile first only, and the results has been tremendous. So I'm glad to be here today.
My kids only drop their phone when the battery dies, right? That's it. They'd like to be mobile only, but there's power limitations, right? They hop operating systems to find something that still works. What does YPF stand for?
Young professionals, young professional family.
Okay.
There you go.
There you go. We'll add that to the acronym list. So before we dig into kind of the future, I mean, Susan, what you touched on, particularly for a financial services audience that's been through acquisitions before, is a pretty big statement, right? That you've sort of brought all these systems together. Like, what is the progress of that journey? And then did it get easier over time? And how have you gotten to this potentially happy state today?
I think, there are different challenges along the way. And I guess, for the fintechs that will grow, and I'm very sure with the exuberance of the fintech platforms that's created. And I use the word fintech a bit loosely. By that, I mean maybe business models, innovation, rather than the big platform players like Google and all that they are providing platforms, for which then these operating models, the entry to barrier is a lot better for them. I think there will be a time when I think all these, some of these consolidation, I think, of business players will come to bear.
Right.
And when they do and they want to perform seamless services, you can't be having different products means different things across organizations and all that, right? So that's where the major bulk of the work is.
For sure.
So in post M&A integration, a lot of it is about bringing customer centricity to what you do, because the customers didn't choose this merger. So the service has to be quite transparent to them. Whatever monies that they have, because we are a trusted organization, has to remain intact. The risk to our stakeholders has to be managed, and to the public, because banking is essential services. And all that has to be managed in that integration, and as short a time as possible, because for any long periods of time, when you have two distinct groups of people working in different culture, you want to bring them as quickly as possible to become one, right, as a family. So that is, I think, the uniqueness that comes into post M&A integration. But having done that, and now trying to overlay, and banking, you know, you will hear the terms, we have legacy systems. There are some banks who call it heritage systems, like current account, savings accounts,
Sounds
loans,
fabulous
and
when you say it that way.
heritage systems and all that. We don't have the luxury like Fintech to just build and select one product and build from scratch. We have the years. We also have generations of customers. You know, our grandparents, our parents, us, and our young children on our banking platform, and we have to serve across these generations. So you can't just discard the old and just embrace the new. So you have to bring the transition through. But what is common is that technology is here to stay, and is how do we bring these services of convenience to everybody, to the generation of customers with the differing needs. And that's what we did by modernizing the architecture to create these digital layers that created some of these innovations that we have, including partnering with fintechs of like-minded fintechs that bring value to our value proposition.
Yeah, so dig into that, and then we can maybe transition on top of that. But so it sounds like you've built a platform now. And when you started, did you think of it as a platform for UOB, or as a platform for the ecosystem, or something in the middle, right? And how has your vision changed over time?
Okay, if you take a look at the vision of UOB, and because we have gone out, and UOB's history has been fairly acquisitive, right? In the mid-2000s, I would say, you know, we had a collection of banks, and that's how our group CEO looks at it, yeah? And then when he became CEO, his vision was to say, how do I create ourselves into a regional ASEAN powerhouse, to be a premier regional bank where the UOB brand can be felt consistently throughout the footprint that we have, right? With this Vietnam now, Thailand, Malaysia, Indonesia, Singapore, and of course our subsidiary in China. And of course UOB is a household brand in Singapore, and Singapore is a good brand in itself, right? How could we bring that brand and elevate it so that we can compete regionally with very, very competitive local banks in each of these countries? So his vision was creating that, and how do you get the customers to feel the brand, to be seamless, right? Where you're going. So, you know, in the earlier days, we were saying like McDonald's, right? When you go to every McDonald's, you sort of know there's McDonald's, there's local variety, but you feel McDonald's. Or you take some of these luxury brands, where they go, it's the same everywhere. Facebook is the same in each of the countries, right? So how do we create that regional brand and the regional powerhouse? So that was the vision. So with that vision is, then how do we create that? So the vision was primarily driven by our group CEO, right? Of creating it for UOB, for the markets, for our customers, who are expanding also within ASEAN themselves. And this is where we can bring value to them.
Sounds good. Sounds good. So now as you've then started to bring the digital banking to life, right? And it sounds like that you had several iterations at this point. You know, what was your vision for digital banking, 2 years ago, and now that you've changed roles and expanded, what is it today?
Our vision is to be the world's most engaged digital bank. And engagement as opposed to trying to what you call cross-sell, right? In banking, we've been talking about cross-selling for the longest time. So the vision of the digital bank is with the data that we can get hold of in this new age, be able to understand the needs of the customers a lot better, and whether we're giving a credit facility to the customer or we are offering wealth management, insurance products, right, savings, and in fact, informing customers right before their payments are due, right, all these things, which intuitively actually it's a bit of a culture. You spoke about culture. It's quite a challenge because in the past you don't tell customers right when certain things are due because they end up having to pay fees, right? But now in this new age, you see the disruptors and the new people coming in with a very customer-centric thinking, like what Susan mentioned, right? So this is, I think, something that when we say we want to be the world's most engaged bank, we have to really put the customer in the center of how we design the entire journey, from end-to-end journey, right? And just give you one example, Joel. We were just trying to explain, what's different, right, between the conventional and between the digital, right? And today on the Tomorrow team, we're people that we call content writers. Content writers as opposed to copywriters. In old days, right, when you work with an ad agency, right, you have a creative director and you have the copywriter. But the team, this is, to be very entirely honest, a learning for me in the last 6 months, right? I grew up very much as a consumer banker, as a conventional banker, and running a bank, right, for the 4 years just before this. But these new people that are now infused into the bank, right, they bring a new thinking, and that customer centricity is not just a buzzword, right? I see that when we're trying to fix certain problems, right, we were grappling with this label, right, called statement cycle in banking, right? Which is statement cycle is this, and they actually wanted to put statement cycle on our screen and tell the customers this is a statement cycle you follow. Yeah. And we had a big grappling with the colleagues that says we don't use statement cycle, but because it's factually correct, because it's not a month, it doesn't start at the start of a month, so it's very hard for you to explain to consumers. But these content writers, right, on our team, they found a way. I shan't let the cat out of the bag ahead of time, but in the Thailand launch that we have, we found a different way to communicate concepts like statement cycle to customers in a very simple, engaging and transparent way. So that's the vision. We're still working on it, to be honest.
And how, you mentioned engagement, obviously. How do you anticipate measuring engagement in a customer-centric way?
To us right now, there are two key measures. One is the Net Promoter Score, NPS, and we're happy to share that in both the markets. In Thailand right now, we are above 40, we're 45. We track this on a monthly basis. In Indonesia, we were as high as 60, right, just a month ago. But still, it's a number that goes up and down, honestly, because we have production issues and challenges all the time. But still, we're in the high 50s in both countries. The other, right now, which I just recently introduced to the team, is we're looking at customer balances. So I think one of the things that, as a result of COVID, people are asking harder questions. I think the easy money is gone now, right? And the shareholders or investors are asking, what's the path to profitability, right? So I think balances is a very important measure of engagement. If they engage with you and you have a path to profitability with them, they should put more balances with you. So we're looking at deposit balances, credit balances, share of wallet that they give to us for the different transactions that they do. Those, we think, are meaningful measures of engagement.
So when you look at newer entrants that have come into the market from a wallet paradigm or an ecosystem paradigm, their focus historically, I would say, is really on transactions, right? Not deposits, not balances, et cetera. Do you feel like they're missing the boat, or that they're going to pivot and come towards your core business relatively quickly?
I kind of feel like they are like eating up the totem pole, right? They are like, sorry, not to use it, but they are like coming up the totem pole, and it's very dangerous, right? So I think UOB's tomorrow is kind of sense like we are coming down and we're meeting somewhere, the barrel is somewhere. So like we can't kind of like rest on our laurels and you're too far away, let them come up. I think it's very dangerous, right? Because the transactions is actually we call the flow of the whole financial ecosystem, right? So it's very important that we have an answer to that as well. So when they are doing if you're doing the flows, you're doing transactions, do it in a profitable manner, because there's costs, there's risk to operating that, right? But I think if you're doing the flows and you're subsidizing the flows, you're using, as I said, the private equity money, right, to do that. There must come a point where you have to be accountable for using that money. But coming up from that transaction actually it's a very potentially powerful way. So we're certainly not complacent about it. We take it very seriously.
Do you see digitalization as somewhat of a zero-sum game up and down the totem pole, or is it actually expanding the market?
It's definitely expanding, right? But when I use that analogy, what I meant is that typically when we hear about the digital bank new players, they're going to the unbanked or the underbanked, or now the new term called underserved, right? So that seems to, I was at a panel earlier this week and somebody used the term, some of the existing incumbent banks are sleeping at the wheel, right? So obviously I think there are segments of market, there are large segments that are basically probably not as well served as they could be. And with the advent of technology, what used to be maybe very costly to deliver a product and service could now, with the help of technology, be possible, right? So it definitely expands the market. And we also found that digital banks that are successful, we're tracking over 200 of them around the world right now, they tend to operate in a large market with a very large population or large ecosystem, right, where the existing incumbents have not yet tapped some of these segments. So it certainly can expand the market, but at the same time, we do need to look at how we can compete and not rest on our laurels, as I said.
And so we touched very briefly on culture, right? And then now you're touching on, to some degree, distribution cost and efficiency, et cetera. But when you think about expanding the market, do you also have to change the mindset of the organization in terms of who an attractive customer is or what the risk profile of a customer is?
If you take a look, it's easy to pick one sliver of a business and says, I could make money out of this, right? So like, for instance, you talk about wallets, you talk about merchants, and probably there are, I think, gaps of services or cost that could have been better managed, and therefore, the profitability, there's profitability for everybody. But the minute you start talking about banking then, taking the deposits, lending out, requires a lot more infrastructure than what meets the eye. Yep. So then it's a question of then the risk appetite. But we have relied on very traditional data to assess credit risk. But what we have learned from China, for instance, is there could be other data that could be relied on that's predictive of what that lending pattern is, and therefore create products that may be different. And certainly it does mean that the bank in the traditional risk mindset has to be a bit more forward-looking to says, are we ready to embrace such risk? How do we test and learn quickly so that we can deploy at scale? Because to a bank our size, profitability, and still want to maintain a certain level of profitability while we are innovating, and obviously with, hopefully with quick lessons that we can learn and then, change the business model. How do we balance that? It's always a constant dialogue. So for instance, when we take a look at the young professional families that's coming out, in the traditional sense we says wealth, but they are struggling or not struggling, they are trying to get their first home, trying to get their first family.
Free wealth.
Wealth, but wealth has to be, spent in a different scale, right? If you look at the past, you say, well, it takes too much, to do that. But today with digital technology, the rich, you don't rely that much on branches anymore, but you have a lot of data. You have a lot of data of their salaries, their payment patterns and all that. What else can you do with it? And how can you avail services, maybe not of that magnitude, but a smaller magnitude when they need it, right? So that is, I think, that paradigm shift that allows, I think, what the banks has traditionally done well, understanding credit of very traditional customers and traditional customer sets that we have served well, and how do we bring the same discipline but with a different lens, and create products and services.
And so when you think about who's on the totem pole, whether the pole's getting bigger or not, I mean, some of them have extreme distribution advantages, and then from a lending perspective, extreme data advantages, right? So how do you think about expanding your market footprint in a way that you can compete in those two areas?
When we have the capability of digital, right? I mean, use insurance as an example. Some of the product ideas that we are able to execute right now is able to make that frequency transformation. Because previously, you think about insurance product, where you probably bought insurance product in a very fairly long duration, right? If it's quite uncommon that people will buy insurance very frequently. But today with technology, right, actually you're able to microtize that, right, for each transaction that you, when you say you start your car, if you're making a drive up, now we can't drive up Malaysia, but you drive up to KL, like I used to do a lot, right? You could actually buy insurance every time you start the car, and that's already being done at Grab, right? That can also be brought into the consumer finance space, right? So when you're talking about certain savings or certain transactions, right, you have, let's say the change, right, of a particular, you purchase certain transactions, but every loose change that you have, you can capture that and then you could put it into a money market fund, right?
Yep.
And you could, so there are a lot of ideas that, as I said, because technology is so pervasive and you could bring the cost to serve down so much, a lot of things that were previously not possible, not feasible, you could actually make it happen right now. So we think that kind of capability, right, when we have the imagination and also the appetite, right, to be able to really microserve, right, at different levels, there's a lot of opportunity for us.
And do you have the agility in the, what I would call the core banking stack at this point, it's out of fashion term perhaps, to actually make those kind of micro product configurations to start to iterate the product for smaller and smaller segments?
So if you think about the core banking stack, right? And these days they say full stack, core banking stack, whatever it is. What we did was we create microservices at the layer, right? So because at the end of the day, you still need to make sure that the money is safe, you know, you can account for it, the profitability, because the profitability beyond deposits and loans is really in our ability to take risk positions against the interest rates books that we have and all that. And all that is, if you think about core banking, that's core banking and beyond, right? So what we did was we create the microservices layer on top to productize what has already been in the layers to avail that to the customers. The real cost is not in the core banking, because when you take a look at the scale and everything else, the real cost is really the cost to serve. When the customers make a phone call, when the customers, you know, says, you know, what do I do? Or go into a branch, or the piece of paper in the past that comes together to say, I want to do this transfer, do these payments and all that. That was very expensive. All these today, these components increasingly all has been digitized. So we are really at a, particularly in Singapore, I feel we have a lot of the components ready to make a lot of the experience that we couldn't have done as efficiently before, actually ready.
Which I would say is an exciting opportunity, but now let's make this ecosystem problem a little more interesting, right? Is we've now had announcements finally around open banking, right, in the region. Obviously, you've got infrastructure, you've got cost spread over your cost base, et cetera.
Yes.
Are you going to be in a position that open banking is an advantage to you, a disadvantage to you, or not really sure?
Okay. I think open banking, if you
Well,
take...
let's make it to both of you, right? Because now you've got a competition that actually wants her data and her infrastructure as well, right?
Well, he's not competition per se.
I would say
The other competition.
No, it's both a threat and an opportunity at the same time, right? Open banking basically means, you know, a level playing field of data information exchange, right? So it's like a sword, right? It's a two-edged sword, right? So it really depends on whether the existing incumbents and the new players that are coming in, how do they deal with this, right? You see, I mean, as a glass half empty, is it half full, right? So back to that earlier question that you had, you know, are banks able, because we keep coming back, you know, use this term legacy systems. As I say, I come into this role over the last 6 months, I try to understand a little bit. It's the core banking system, it's a ledger. There's debits and credits, right? And if you look at the cost of hardware, the cost of transactions, the short answer to your question is, yes, we're capable. There are no issues, right?
No issues.
So if you take it down to, instead of doing once a year, I do it every 5 minutes, right? It's about the hardware and the memory and scale. And today with virtualization and containerization, right, there is no issue in terms of scaling the hardware capacity. Like what Susan said, it's actually the service that comes, because if every 5 minutes, right, you call me back on something that otherwise I expected a call from you every year, then my cost to serve will be very high. Which is why I think this open banking, or if we embrace this particular approach, right, then the digital surf, I think, probably has to be rethought. I mean, that's the honest answer. We're working on chatbots, right? Meaning that customers now, when we found it in Thailand, Indonesia, they prefer to chat rather than to call a call center agent. And our first chat resolution, okay, actually with in Indonesia, I think Bahasa is working out to be an easier language for us to deal with. We get close to 70% first chat resolution, right? I have live chat agents. I have a chat bot that's doing that. I'm able to handle roughly about 70%. So let's call it 66, all right? Percent of the chats that are coming through. And that has enabled us to scale. Now, at the start of this year, I had 0 digital bank customers. Before we close this year, we will be comfortably over 100,000. So we have scaled that kind of customer base, which previously, I think if you talk about the cost and infrastructure we had to set up at the back, it'll be quite high, right, to maintain that same service level. But now we're able to do it, right, with this servicing capability, right? When we design the product, we have to think about the whole end-to-end. I kept coming back to that end-to-end point. We cannot create a product and then we think that we're going to throw it to Susan, operations, technology, somebody in the middle and back office will take care. We need to think about the journey when the customers disburse the loan, when they need to redeem the loan, when they have a question to answer. How would that journey all be fulfilled on your phone, by yourself, digitally, right? Without having to set up another back office to set this up. So the short answer is yes, but we are not. Are we there yet? To be honest, I don't think so. But we're certainly clear about what we need to do, and we're working on it.
Sounds great. Well, that incredibly optimistic sense, I have to say we're out of time, I'm afraid to say. And it's a pleasure having Susan, Kevin, having you both here today. Thank you very much.
Thank
Appreciate
you.
it.
Thank you.
Thank
Joel.
you.